It's been a crazy week in terms of headlines and market moves. The start of the week, we saw a huge slide due to the DeepSeek stuff. And then by Friday, look at the NASDAQ, we're right back to where we started. Just going to show the kind of market that we are in, which is frenzy buying and tech stocks continuing to power the markets higher. And headlines like this, yet again, proving to be a great opportunity to carefully look to buy the dip, which is exactly what I did this week. Let's talk about it. Welcome back to the channel, guys. As we get started, do me a big favor, hit the thumbs up button, and let's talk a little bit about this week because I think it's a really important one to pay close attention to. When it comes to markets, you're going to get news that kind of causes a knee-jerk reaction across the board. Like we saw on Monday, there was big fear and massive sell-off of a lot of tech stocks. In fact, the NASDAQ in a day, guys, think about this, in one day dropped at one point by 5%. Scaring market participants and causing many traders to sell. In fact, I'm not naming any names, but a lot of people in my comment section came out on Monday super bearish and actually kind of teased me or made fun of me for thinking, hey, this is a dip buying opportunity. Now, sometimes I'm right, sometimes I'm wrong. So it wouldn't be fair for me to say like, see, I told you so, because sometimes I'm wrong. I'll tell you right off the bat, I have a position that I've been wrong about on the oil trade that I took, clearly not working out for me. So I'm not going to say like, I'm always right. But sometimes you have to remember that big spikes in fear are oftentimes, especially for indices and cryptocurrencies, oftentimes those are the types of environments where, everybody kind of gets flushed out and weak hands or paper hands, if you want to call it that, get kind of thrown to the side, they bail on it, or they even get bearish. The put-call ratio on that day also spiked much higher in a single day. Now, of course, it didn't really reach any super extremes in terms of bearish sentiment, but it definitely went from being very bullish sentiment to a huge jump in sentiment to being more bearish. And we're looking at the put-call ratio, by the way. A rise in this figure usually shows you stronger demand for puts, and a fall in this shows you demand for calls. So clearly you can see we've re-entered into very optimistic periods in the markets. And we can also look at other sentiment when it comes to stocks for a second by looking at the AAII Investor Sentiment Survey. This shows you a week-to-week report that shows investor sentiment. What we can see here is people got a little bit more bearish. People got a little less bullish. People kind of tilted more, bearish this past week. And actually, oftentimes, a spike in bearish sentiment is a really good indicator in a bull market. Now, granted, we are in a bull market, so this won't last forever. But right now, the environment is when people get scared in a bull market, those are opportunities, and they have been something that have been great opportunities for the last few years. That's why we use software like this to track sentiment, to categorically look for opportunities in the markets when people start to get scared and sell their shares at low prices, where we can actually step in, buy the dip with good risk management, no leverage, and move along. The thing about stocks like NVIDIA is they've become very gamified in the last few years. What I mean by that is you can buy things like NVDL nowadays, which is a 2x leveraged NVIDIA ETF. This dropped, by the way, by 35% in a day. And so while people are out there gambling and playing, super high leverage stuff or buying massive out of the money options or things like that, let them do their thing. On days like Monday, where you get these capitulation days where people have to massively sell off their leveraged positions, for those of us who are patient and willing to buy dips carefully, slowly, steadily, not using a bunch of margin or leverage, those are days where we can take huge advantage, especially when we know the fundamentals are more likely to be on our side. That's why this week I went long a bunch of stuff. I'm long Bitcoin. I'm long the S&P 500, right? I'm going with the flow of the fundamentals. And I want to show you a really powerful chart here that I'm going to use all year long to stay true to the fundamental story. Don't be discouraged or confused or thrown off by headlines. There's going to be no shortage of those this year. But what I want you to consider is let's pay closer attention to just straight up the data using our heat map called the economic heat map. In fact, we'll show at the end of this video a clip of Kenzo and I discussing just how powerful this tool can be for filtering out the noise that comes with headlines. If you're feeling like we're living in a 24-hour news cycle and there's new headlines and Trump said this and Putin did that and all this stuff, if that's been something that you're worried about, I would invite you to consider doing something similar to myself, which is let's just focus on the data, stop focusing on the articles and headlines coming out, and instead just stay true to what we do here on this channel day in, day out. We use the EdgeFinder to look for possible setups in the market using the top setups algorithm. And then what I do is I look for technical entry points, especially when sentiment spikes and I can get a contrarian indicator telling me, hey, maybe there's some opportunities here. So that's exactly what we did this week. And we made some really good money just trading against sentiment in the direction of market fundamentals. If you don't have the EdgeFinder, it's a great time to pick it up. We're currently doing a major discount on the product. You can currently get 30% off the EdgeFinder using the link and promo code in the description down below. If you have any questions, you can also speak directly to my support team on our website using the first link in the description. You can chat directly to someone on my team who can give you some more information about how the tool functions or get you some nice extra discounts for subscribers. Don't miss your chance to pick up our tools and start trading with the data in your favor. So as markets continue to drive higher here, I am going to continue to look to hold on long and stay convicted. Again, I'm trading in the direction of the data. Now, what about gold? Gold trading to a fresh all-time high, trading at the time of me recording this at 28.10, which is an impressive milestone here, taking out the all-time highs. But I want to play a little bit of, kind of stay true to what I've been saying here. Why are you not long, Nick? Why aren't you riding this trend too? Well, the answer is because my system has not told me it's time to trade gold. To be completely honest, I think gold is trading higher on those headlines that I just talked about. So everyone is kind of getting all fearful around what's happening with Trump and what's happening with the tariffs and what's happening with Putin. And I think that that's causing some uncertainty and people are just buying into gold as a bit of a hedge. Totally respect that, but that's not the reason I would like to buy gold. I'd like to buy gold when the economy looks to be slipping a little bit, when the dollar is weakening, and I have a good fundamental background in terms of the macroeconomic data that I track. Headlines are not going to be enough for me. I need to see that data and a technical trend that supports it, and then I can look to trade in the direction of that trend with more confidence. But right now, gold, I'm just going to continue to stay on the sidelines. Even though it looks like a lot of fun and there's some great bullish trends happening, I have to be systematic. And that's what's kept me around for so long in the markets, is staying true to a system that I know works. I just have to be patient enough to wait for the right setups. Let's also take a look at the DAX, which is getting a bullish reading here. And I'll show you another example of a chart where I have to really use patience. So you can see the German stock market has been ripping to the upside. I mean, this is a crazy run here. A 10% move is really large for a stock market index. And what you could see here is we have not really had any major pullbacks. So this is an example of a chart where patience is important. Not only am I waiting for an EdgeFinder confirmation, but I'm also looking for a proper pullback to play this with some good risk management. So check this trade out. This is a beautiful setup that I love for the DAX. But the reality is this is going to require some patience before I can potentially take this trade, because we may not come back to this. We may just continue higher. But if we were to get a pullback in the DAX, I love this setup for longs, because I think that we have, again, assuming the EdgeFinder is still giving us a positive read, you've got a strong overall reading on the EdgeFinder and a nice technical setup. And then I can manage my risk and take a small position on the long side. That is a setup right there as a quick example of how I would use the EdgeFinder. I love this setup. I'll continue to watch for it. Yen pairs are also getting pretty across the board bearish readings. So for example, when we take a look at our yen crosses, the dollar yen, not a lovely chart, kind of a overall daily chart uptrend, but in recent times, a little bit of a 4-hour downtrend. Don't love that chart, to be honest, but there are some levels. For example, CAD yen, if we break those lows, or Aussie yen, if you break those lows, those breakout retests actually look kind of interesting on the short side. I do still have my Bitcoin and S&P positions on the long side, continuing to try and let those play out and just staying patient with it. Bitcoin is back towards those highs. I'd love to see a break and close above that previous all-time high as an opportunity to start trailing my stop loss further into profit. And small caps are trying to come back to life, but what's really leading the parade higher has been the Dow Jones recently. Dow Jones looking very strong year to date, and now testing that all-time high. With this also getting a strong reading on the EdgeFinder, this is another one that is very very much setting up for me. So what I mean by that is a breakout retest of this area could look really good for continuation plays on the Dow Jones. It's a trade I'm currently watching. Dollar CAD also really strong for USD or for Forex traders. If we take a look at USD CAD, you can see we had a little break above consolidation, a little bit of a weird wick action here, but I'm going to watch to see if this level comes back into play. I may get an opportunity to buy that dip and continue to play the long side of the US dollar. Today's video is sponsored by DNA Funded. If you are not already a funded trader and looking to become one, check out DNA Funded down below in the description. There is a special discount code, as you can see on the screen, which gets you extra discounts off of any of their challenges. And again, they have payouts in as low as 7 days. You can do profit sharing up to 90%. They have unlimited trading days on 1 and 2 phase challenges, and you can trade over 800 assets. So check out DNA Funded down below and do your due diligence to see if that's right for you. So this morning and yesterday, Kenzo, we had some interesting stuff on the economic data front. This new tab is called the US Economic Heat Map. And all it does for us, Kenzo, is it shows us all of the key US economic data to give us an idea of how things are looking across the economy. And what we see here is that if something is blue, it favors risk on. And if something is red, it favors more risk off. And what I like to look at is just overall, is there more blue or is there more red? If there's more blue, I'm going to continue to be more oriented towards risk on or bullish. And if it's more red, then more oriented towards gold and selling stocks and things like that. So the reason I point this out is take a look at GDP growth. So yesterday we had GDP that was a little bit weak, but today PCE numbers just updated here, came in flat to expectations. So not a big change. So we wouldn't count that as a win or a loss here, but most of our indicators here continue to show bullish outlook for the US economy. PMI is looking solid, right? So we also have retail sales, a little bit of a miss, GDP a miss, but then inflation readings, core CPI last time around came in light. That was a really good thing for the market. PPI came in light compared to forecasts. And that's what we're looking at, is the actual versus forecast here. We also had strong jobs data. Unemployment claims this week were also solid. So you have JOLTS also stronger than expected in recent reporting. So this is kind of your cheat sheet for economic data. But the reason I talk about this, Kenzo, is that, you know, people are trying to figure out, hey, at what point do I start selling stocks or shorting indices? And to me, you'd have to wait for this to light up red. Would you agree? You'd be looking for like the economy to actually show signs of weakening rather than growing?
Yeah, I think I like the summary there, man. That is actually very good. I never saw that before, actually in one page. That is very smart. So yeah, I think if everything changes there maybe to a red color, that's where maybe we can say something, because now, especially you can see maybe from interest rates conference, we see that actually inflation is not really going lower as we were expecting. So which means maybe the dollar is going to be stronger for a while, and those rate cuts, they're not going to come easy. And I think it's easier to see here that we don't really see much of the red colors along the way on the table. And I think that can change your decision very quick. So I think this is way too good, man. I think, yeah, this, whoever is getting this, yeah, it's actually 4-5 steps ahead of everyone.
Thanks for watching this video, and on the screen right now you'll see some other options of other videos we put together that might be helpful to you in your trading career. So thanks for watching, and we'll see you next time.